Good day, students. Happy stay at home. Yes, we are back again for another lesson on business studies. Yes, this class is mainly for JS3. It's just a revision on what we've done already. The topic is just revision on trading profit and loss account. Trading profit and loss account. Before we proceed, I will want to talk on the previous lesson, the lesson we had on posting from ledgers into trial balance, the last lesson. In that lesson, we said that ledger is the principal book of accounts, and trial balance is the list of balances extracted from the ledger account. And I gave us steps that we should adopt in posting to the trial balance, extracting a trial balance. I told us that first of all, from the transactions, we first of all prepare our cash book. Remember, we first of all prepare our cash book. Then from that cash book, we now prepare the ledger account for each of the transactions. Then, extracting a trial balance, we extract all their balances. Wherever we have the balance CD, we place it. If you have balance CD at the debit side, in our trial balance, we post it to the debit side. If you have it on credit, we post it to the credit side on the trial balance. So that is posting from ledgers into the trial balance. Today, we are going to look at another accounting aspect or component of business studies. Remember, this is a revision of what we've done before. Okay, at the end of the lesson, students should be able to state the purpose of trading account. You know it? This is two accounts. We have two accounts in one. Trading account and profit and loss account. Then when we combine the two, it becomes trading profit and loss account. 2. From the account, we calculate cost of goods available for sale, cost of goods sold, we calculate the net sales, we calculate the gross profit or gross loss of the account. Then, to prepare a simple trading profit and loss account. As I'm saying this, I will want you to flash your memory back to what we've done, so as to recall. Then, this is accounting aspect of business studies. I will want you to get yourself focused. Don't distract yourself. Don't allow your siblings to distract you from the lesson. Remember that bookkeeping or accounting requires your rapt attention. So in that case, don't allow anything to distract you. Get your writing materials, because we are going to do it together. You know, the way we used to do it in classroom. So that's the same way we are going to adopt. Okay, bring your calculator around you. Now let's go to the trading account. Trading account. Remember that this lesson is Participatory. Everybody must participate. Okay. What is trading account? Trading account is an account prepared to determine the gross profit or gross loss made by an organization. Example, when you bought something 10,000 naira and when you bought something, an item 10,000 naira, and you sold that item 12,000 naira. My question there is, did you make a profit or a loss? And how much is that? That's good. A profit of 2,000 naira. Okay. Another instance. What if you bought that item 10,000 naira and you sold it as a result of one defect or one problem or the other? You sold it 9,000 naira. Was that a profit or a loss? That's a question. Very good. Loss. And how much is the loss? Loss of 1,000 naira. Because you could not even complete your cost price. Talk more of making any profit out of it. So that is what gross loss. So trading account is used by an organization to determine the gross profit or gross loss. Very good. A trading account can be used to calculate the following. The main thing is the gross profit or gross loss. Then it can be used also to calculate the cost of goods available for sale. That is the total worth of goods, the total value of goods that you have available in your store to sell in that period. Then out of it, the cost of goods you sold, then net profit and net sales and net purchase. Please, it's net sales, not net profit. Okay. Then let's look at the definition of the profit and loss account, part of it. Remember that we are saying that these are two accounts in one. So profit and loss account is a continuation of the trading account. What do I say? Continuation. So when you prepare your account, you stop at a limit and you continue. That continuation is what we call profit and loss account. And this profit and loss account is used to determine the net profit or net loss made by an organization. Emmanuel, now you are going to differentiate the two. Tell me the difference between trading account and profit and loss account. I just said it now. Okay. No, you are missing something. Say it the right way. Yes, you are in line. Okay, now, he said that trading account is prepared to determine the gross profit or gross loss made by an organization. Very good. Why? The profit and loss account is used to determine the net profit or net loss. That's very good. This one, trading is used to determine the gross profit, while profit and loss is used to determine the net profit or net loss. In practice, profit and loss account is usually presented immediately after the trading account. Remember I said it's the continuation. So immediately after the trading account, you start off with that one. It always starts with the gross profit brought down from the trading account. That gross profit, that difference, that is called balance BD. You bring it over, then continue from there. That's what we mean. All expenses incurred in the running of the business are charged against the gross profit. What are the expenses? Salaries, rent and rates. Then we have insurance premium, we have transport. There are many expenses, many of them. that an organization can incur. But whenever you have it, remember that it will be charged against the gross profit. Okay. Now we have two methods of presenting trading profit and loss account. We have the vertical or columnar method. That is the one that has columns. Then we have the the T account or the horizontal method. Now let us quickly illustrate it. That's why I say you should bring your calculator around you. Let's illustrate it. Illustration 1. We are going to illustrate it with these transactions. Opening stock 2,400. Be writing it down now. Be fast. Because of our time, so that we complete everything and determine our gross profit or gross loss. Okay. Opening stock 2,400. Purchases 21,500 naira. Sales 33,000 naira. Closing stock 3,600 naira. Chidera, I hope you are writing. Stop looking, just write. Return inwards 580. We have return outwards 300 naira. Carriage inwards 1,350. Carriage inwards 1,350. Have you written that? Okay. Salaries 4,500. Salaries 4,500. Rent and rates 1,000 naira. General expenses 500 naira. Insurance 200 naira. Insurance premium 200 naira. Insurance 200 naira. Have you taken that? Have you? Have you taken that? I know you are copying down the transactions. Okay. Darlington, I hope you are writing. Chibuchim, be fast in writing. Chibuchim, be fast. Discount allowed 200 naira. Discount received 500 naira. The last, electricity 350 naira. Please, these are the transactions. These are the transactions. Now, remember we have the two methods, but let's just use the first method. Let's just use, because of your exam. In your exam, I've told you that just leave the other method and move straight to the T account method, because in that one I consider the easiest, the simplest. Okay, now using the T account method, you draw your lines. You know how we draw it now. Okay, the T account, you make it in a T form. That's why we call it T account. Then you put double naira signs. Naira signs here, naira sign here. Then coming over to the right hand side, naira sign, that is 2 naira signs. Remember why we are putting this naira sign, because we are measuring in naira, not in dollars or in any other currency, but in naira. So that's why you should do it. That's why we are writing any transaction, any amount, you are not meant to write the naira again, because the naira is at the top. Okay, simply, you know that this account is very simple. It's just that some of you are getting yourself distracted. That's why you are finding it difficult. It is not difficult. That's why I decided for us to revise on it. Because mostly you will see it in the exam, mostly in the OBJ. Sometimes it will come out in the theory, but you will see it in the OBJ. They will ask you to determine the cost of goods. They will give you some transactions and ask you to determine the gross profit, determine the cost of goods sold, determine this and determine that. So pay attention. Don't give me any divided attention, but undivided one. Okay. Remember, we start with our opening stock. How much is opening stock? 2,400. At the left-hand side, write opening stock. And the last naira sign is where you have to put the 2,400. Is there any purchase in that? Is there any purchases in that transaction? Yes. We have 21,500. 21,500 in the first naira sign. Is there any return outwards? Is there any return outwards in the illustration? Yes, we have return outwards. Who can tell me what return outwards is? Oh, Michael, you are saying goods return by your customer to you. No. Return outwards are those goods returned by you to the suppliers. I've said it. You purchase some products. Coming home, you realize that some are not good. You realize some are defective. You realize that some have damaged. You realize that some have expired already. What do? You won't keep them in your store to sell them. What do? You take it back to the supplier. So that is what we call return outwards. I used to tell you, I've been telling you, out. You are taking it out of the organization. Why the in is the one inward, is the one your customers are returning to you. And that one you always minus or deduct from sales, because it's what you have already sales and people are bringing it back to you. So you don't count them anymore. What you will do is what? You less them, you remove them. Okay, we have the return outwards. That is goods you sent back to where you got them, you bought them. So you purchased them. So they are called the return outwards. So the return outwards is how much? 300 naira. You put it at the first naira sign at the left hand side. You minus the 2. What it will give you is 2,000. It will give you 2,100 naira. Then this 21,200 naira, you shift it to the last naira sign. The last naira sign, remember we have opening stock placed there, 2,400 naira. Then minus the 2,400 naira from 21,200 naira. Minus the 2,000, yes, from the 21,200 naira. What will it give you? Very good. 23,600 naira. 23,600 naira. That is what we call our cost of goods available for sale. That is the worth of goods, the value of goods you have in stock. This is the total worth of goods you have at that time. So what will you do? You will sell now. Okay, now, you've not finished. Is there any money you use in bringing in the goods? Is there any money, any cost you spend in bringing in the goods? Check the transactions. The carriage. Yes, there is carriage inwards. So the money you use in bringing goods to your warehouse or to your store or point of sale is called carriage inwards. So how much is the carriage inwards? 1,350. Remember we said add. So you now add the 2. So the 2 will give you the 23,600 and 1,350 will give you 24,950. So before you get your net purchase, remember before we are able to get our 21,200 as our net purchase, what did we do? I will call somebody. Somebody should answer it. Okay, very good. Let me say it again. We did purchases, which is our 21,500 less, that is minus 300 naira. It gave us 21,200. That is our net purchase. Remember how we determine our net purchase? Purchases minus anything you return back to the seller. So that is the net purchase. Okay, now when we add our carriage inwards, which now gave rise to 24,950, it is the cost of goods available for sale, the worth of goods we have in stock. So out of that worth of goods, how much product did we sell? Could we sell in that period? Now, do we have any closing stock from the transaction? Check the transaction again. Yes, we have closing stock. Remember, closing stock is the stock at the end of the period, trading period. While opening stock is stock at the beginning of a trading period. I've explained this thing before, over and over again. Okay, now, what do we do to closing stock? Are we going to add it or are we going to remove it, less it? What is this? Some are saying we are going to less it, some are saying we are going to add it. How are we going to add it? The goods that we could not sell, unsold goods, we are going to less it now. They are still there in your warehouse, they are still there in your store. So why will you add it? You did not sell them now. So we are not going to add them, we are going to less them. So now write less closing stock, and that's our closing stock is 3,600 naira minus 3,600 naira from 24,950 to see what you will get. 24,950 minus 3,600. Have you done that? Oya, be fast because of our time. I'm doing my own here, so do your own. I will not calculate everything for you. You will calculate some. Okay. 21,350. That's good. Beautiful. Okay. That 21,350 is called what? That is what? Now, what have you determined? Cost of goods sold. Very good to you. Very good. And now, I'm going to give you a reinforcement when you are back for answering this question. Thank you. Okay, you have taken note of all that concerns trading account. Remember our sales. Then you go to your right hand side from the beginning of the right hand side. Now you write your sales. Your sales is how much? Your sales is 33,000 naira. Yeah, right? Okay. Is there any goods? Do we have any return inward? Is there any goods? Or are there some products your customers return back to you? Yes, 580. Then minus the 2, what do we determine? Net sales. 33,000 naira minus 580 will give us 32,420. Now, this 32,420 minus it, less it with that cost of goods sold. That is, let me just say it in Igbo so that you understand it. Ngwaahia ego ole irere at that time. The cost of goods you sold that time is 21,350. Then minus 21,350 from your net sales, which is 32,420. It will give you 11,070 naira. 11,070 naira. $11,070. What is this thing called? This value now, what is the name? Very good. Gross profit. So we have determined our gross profit. And this is the end of trading account. So this difference, 11,070 naira, is what we will use to continue in getting our net profit, which is trading profit and loss account. Now let's bring the 11,070 naira over to the right hand side. When you add up the two, the 21,350 and that 11,070 naira, it will give you 32,420. Likewise, the other side. So now let's bring it back. Let's bring it over to the trading account. Remember I said, who can remind me? Okay, now let me just say it. The continuation. Remember the way we defined it. We say it's the continuation of the trading account to determine the net profit. Remember I told you that before you determine your net profit, you minus all expenses. But in gross profit, you don't minus any expenses. The expenses that you minus is just direct expenses, direct cost expenses. That is the carriage, the money that you use in bringing in the goods. That's all. But any other expenses like salary, wages, electricity, advertising, no. Is in this one we are going to do profit and loss. That you will now charge all of them against the gross profit. Okay, now let's start. Bring it over to the right hand side. Keep it there, leave it there. Gross profit BD 11,070 naira at the real naira sign. That's where you place it. Now let's go over to the left hand side. Check the transactions again. Now let us pick out the expenses from that transaction. Let's pick out the expenses. Then we are going to bring them, place them there without totaling them all. Just let's. Okay, the first expenses there is what? We have salaries. Is salary and expenses to an organization? Yes. You paid out money to your workers. So in the first naira sign, place your 4,000. All that we are going to do, you place them in the first naira sign. Okay. Rent and rates. Rent and rates. The money you paid for using a particular place, a particular building. Remember, it can be rates you pay to the government for using their water or whatever, electricity, whatever government could give to you. So we combine the two, rent and rates. 1,000 naira. From the illustration again, we have another expenses, general expenses. How much is our general expenses? 500. Another one is insurance. Insurance is how much? 200 naira. Then is there any discount you allowed your customers, maybe for buying from you, for you to return their loyalty, their patronage? Yes, discount allowed. Remember, it's an expenses. It's expenses. So in that case, you still write it out. 200 naira. We have two discounts there in the transaction. Remember, discount allowed is an expense because it's the one you allowed your customer. Why discount received is the one given to you by other organization. In that case, discount received is an income to an organization. Sure, I've said it before. Okay. Okay, write 200 naira. Any other expenses? Tell me now. What is this one? I told you that this class is an active class. Everybody is participatory. Everybody must participate. I won't be doing everything myself. Check the transactions. Okay, that's good. Electricity. Very good. When you are participating in anything, in everything or in some things, then the teacher will be happy that at least you are contributing. Okay, electricity is how much? Electricity is 350. Now, let's go over to the right hand side. There we have our gross profit. Is there any income to that organization? In when you go up an organization, apart from their expenses, apart from the gross profit. Check now. Scan through. Yes, we have discount received. Add the discount. The discount received is 500 naira. Total everything. Total everything. Total all the expenses. The total expenses will give us. I'm waiting. The total expenses will give us what? 6,750. 6,750. Please, you will correct this thing. You will add 500 naira here. Add 500 naira as your discount received. There is omission, so add it. Typographic error. Add it. Add 500 naira with that gross profit. That is what gave you 11,570. Forget about the omission. Just write 500 there. Once you've done that, now total all the expenses. I mean, don't do it directly, like I've told you before. Do it on a rough sheet, on a paper. Add everything, starting from the salary, rent, general expenses, insurance, discount allowed, electricity, and it will give you 6,750. As you can see now, there is nowhere the 6,750 appeal. So in that case, you will do it on a rough sheet. So it gave us 6,750. Then minus this 6,750 from 11,570. I repeat, 11,570 minus 6,750 will give you what? I repeat again, 11,570 minus 6,750 will give you what? Anybody ready with the answer? Beautiful. 4,820. 4,820. The difference is now 4,820. And what is the name? Net profit. Net profit. So when you add up everything again together with the expenses, in that 4,820, you will see that it will give you the same amount the right hand side gave you, which is 11,570. 11,570. The two sides are equal now. Very good. 11,570, 11,570. Remember, I told you there is an omission here. You did not include here. There is typographic error. We did not include our discount received. So as you can see, the way we determined our gross profit, the way we determined our net profit. Now, important formula. Net sales. How to get net sales is sales minus return inwards. How to get net purchases? That is purchases plus carriage inwards less closing stock. Less means minus. Less means subtract. Plus means addition. So once you get your purchases, you add it carriage inwards and minus closing stock. That is how we determine our net purchase. Then cost of goods available for sale. That is the worth of goods you have to sell. The total worth of goods you have to sell. Inwere ire. So in that case, how do you determine it? Is opening stock plus net purchase. Net purchase. If you check what we did, you will see this thing, the formula I'm giving you. I just want to write out the formula so that for easy determination. Okay. Number 4 is cost of goods sold. Oh my God. Cost of goods sold is very easy. Cost of goods available minus closing. That is the total worth of goods you have. Total worth of goods you have that time. Minus the goods available. The total cost of goods, sorry, let me start afresh. The total cost of goods you have to sell minus sorry for that. Let me start afresh. I've stated number 1, which is net purchase. I've stated number 2, which is net sales. I've stated number 3, which is cost of goods available for sale. Then the 4th one is cost of goods sold. To determine cost of goods sold is cost of goods available for sale less closing stock. Like we have 200 worth of goods, then out of it we sold 200. We sold 150 worth. So in that case, the closing stock will be 50 worth. So what you will do is minus the 50 worth of goods. That is how to get cost of goods sold. Gross profit or gross loss. Net sales less cost of goods sold. Then net profit. How do you get your net profit? Net profit, just what we did. Gross profit plus other incomes less the indirect expenses. So these are the ways we can determine each or any of the thing. Now assignment. Do this assignment. Amongst all the assignments that you've been doing, this one is the most important one for me. I want you to do this one. Because this is just what we did together. I want you to do this one now yourself. I will not tell you anything. You will do it yourself. Yes. When we are in class session, in school session, we've done assignments pertaining to this topic. So do it. It's not a big deal. So do it. So using the T account format, prepare Rising Sun and Sons Trading profit and loss account for the year ended December 31st, 2018. Then closing stock 3,000 naira, opening stock 2,005, purchases 7,500, sales 16,000, rent 2,000, salaries 3,500, insurance 1,000, advertisement 1,500, carriage inward 500, return outwards 300. Do these assignments, snap and send it as picture to my WhatsApp number. Any question you ask me, I will entertain your questions. Thank you. Stay home, stay safe. May God guide all of us in Jesus' name. Amen. Thank you. Thank you. Thank you. Bye.